you have this in Canvas, but this is all of the payroll entries that a company typically makes when it pays things. So the first transaction is when we record the payroll, so payment of the payroll. We do this every pay period, and it's in the cash payments journal. And this is always the entry. We're going to debit salary expense for total earnings, what was earned by the employee. We're going to credit all these liabilities, and here's how they're computed as a summary. And then we're going to credit cash for the net pay. The second type of transaction that I do, again, every pay period in the general journal, is record the employer portion of payroll taxes. So we debit payroll taxes expense, and it is based on the sum of these four that we know how to compute, and we credit those liabilities. So TE is taxable earnings. And then FUTA earnings up to $7,000 at this point, and we went through that. The last three are just paying off all those liabilities from both the employee portion and the employer portion. So first thing we do, typically 1 month on the 15th of the month following, is we pay all of the employee income tax, Social Security, and Medicare. So this is only the employee portion. This is both the employee from entry 1 and the employer from entry 2's liabilities. And then the same on Medicare from entry 1 and entry 2, the employee and employer portions. And then cash is the sum of the three debits. That's how much we're paying. So again, we pay it the following month on the 15th. So if it ends March 31st, we would pay, well, we'll go through that in another slide, so I won't do that here. And then the FUTA tax liability, 1 quarter on the last day of the month following. So it's for 1 quarter, and we do it on the last day of the month following. And then SUTA, same thing as far as timing, and these are all in the cash payments journal. And we debit the liability to get rid of it, credit cash. So the only one I didn't list here is if we were paying like medical premiums or retirement, we would cut a check to the insurance company or medical place for those premiums. And I have included here for you the journal entries that are typically made for a company on a semi-monthly payroll, and kind of the timing in what journal. So there are 5 entries. The first one is to record or pay the payroll, and we do this every pay period in the cash payments journal. And our debits and credits are always these. So we debit salary expense for total earnings, which I'll abbreviate as TE, and that's what the employees earn, the cost of hiring them. Then all of the employee portions of these 4 liabilities and how they're computed, and we've talked about that. And then the credit, to make it equal, is the net pay. So we've taken all the total earnings minus the deductions, which were liabilities, and credited cash for the net pay. The second entry that is also done every pay period is to record the payroll taxes, and that is in the general journal because no cash is involved. And we debit the payroll taxes expense for the sum or the total of these other 4 that we know how to compute. And these are the 4 liabilities that all employers have to pay. And here is how they are computed over here. And FUTA earnings, don't forget, is any earnings up to $7,000 times these percentages. So those are done every pay period to record all the salary related cost and my payroll tax cost. So then I have to pay off liabilities as well. So the third entry is the payroll taxes for all the federal related things that are going to Social Security Administration Office. So these 3 liabilities are going to be debited, and cash is going to be credited for the total of them. I'm going to put this in the cash payments journal, and I pay this typically for most businesses for 1 month's worth on the 15th of the following month. So if the month ends June 30th, then I would pay it by July 15th. And the debit to the employee income tax payable, this is only the employee portion from entry number 1. The Social Security and Medicare is the employee and employer. So from entry number 1 for the employee portion, and then entry number 2 for the employer portion of the tax. And then the 4th and 5th entry, same kind of thing. So it's for FUTA and SUTA. They both go in cash payments journal. They both are for 1 full quarter, and I do it on the last day of the month following the end of the quarter. So if the quarter ended September 30th, I would pay this by October 31st. And I debit the liability from entry number 2 that I've made every single pay period, so for all of them, and then I credit the cash. Okay? So those are the 5 journal entries. Then over here, I've tried to put together a schedule that hopefully helps summarize a bit on due dates and timing of things. So across the top, notice that I have entry number 1, 2, 3, 4, 5 from the thing we just talked about for payroll, payroll taxes, and paying off the federal things, FUTA and SUTA. And I kind of put the entries here just to keep reminding you. So in a typical year then, if I'm getting paid semi-monthly, I would have January 15th, 31st, 15th. Those are all my pay periods. As far as due dates of forms, I've tried to put those over here. So that's not making payments. That's just reporting requirements and when things are due. So a W-2 to the individual employees due by January 31st. Form 941 is also due, reporting the employer taxes. W-3 is just summarizing all those W-2s. And I've tried to put, again, Form 941 is on the month after the end of the quarter. So the quarter ends March 31st. It's due April 30th. Quarter ends June 30th, due July 31st. And this is the December 31st ending one. So the month after that. So I've tried to do that throughout the entire year and going into another year just to show you the timing. Then as far as all of this goes, so I would make these entries, payroll entries for number 1 and 2, the employee part, the employer parts, every single pay period. So I put a check mark because I would do that journal entry every single pay period for the whole year. Then as far as paying the federal, this 3rd entry, for the month ended December 31st, I would pay that on January 15th. Then for the month ended January 31st, I would be paying these, the 2 January 15th and 31st, all of the taxes related to them. So that FIT, that Social Security, that Medicare, that Social Security. For every single one of those 4 payrolls, or 2 payrolls, sorry, and I would pay it by February 15th. So on the 15th of the following month after the month ended. So I would do these 2 February ones by March 15th, these 2 March ones by the 15th of April. So that's for entry number 3. So I'm going to pay those every single month, and I've circled which ones it relates to, those liabilities. FUTA and SUTA, on the other hand, I pay them quarterly. So on the end of the month following the end of the quarter. So April 30th for March 31st, July 31st for June 30th, September 30th I would pay on October 31st, and December 31st quarter I would pay on January 31st. So that is the timing, and I didn't draw arrows, but all of that red, it's really orange on my sheet, but red circle would be what I would be paying for these quarterly things. So the FUTA from each of these payrolls from January through the end of March would be made on this payment on April 30th for FUTA. And then the same for SUTA. I would add all of those SUTA payables, and I would pay that here. Okay? So hopefully that kind of helps with the summary of the chapter.